Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Don Pollard. Don is a Chartered Life Underwriter, or CLU, and also a Chartered Financial Consultant. And so he's an insurance broker at Advanced Professionals, a regional insurance brokerage company headquartered in Northern California. They serve about 350 clients or so. And the company offers employee benefits and executive life and disability insurance planning. Don has worked in the insurance industry since 1973 and at Advanced Professionals, I guess, for about 15 years now?
About 15 years.
Okay. And he's managed insurance agencies and trained agents. And Don is a past president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors. Because healthcare insurance is such a critical area, Don and I did a series of 3 consecutive interviews discussing healthcare reform and choosing medical insurance coverage. And you can find those interviews about healthcare reform under past episodes at www.financialinsiderweekly.com. Today, Don and I are going to be discussing health insurance for individuals. And as we get started, again, I want to caution our viewers that health insurance is a huge area. There's a lot of special rules that are involved and so forth. So we can only hit a few highlights. This is meant to be the beginning of a conversation that you should have with a skilled insurance person. Also, the medical insurance rules vary from state to state. And so Don and I work in California. And so we'll be mostly talking about things from a California standpoint. And so just be aware of that as well, that there may be differences for your state. So Don, thank you for joining me today.
You're welcome, Mike. Thanks for having me here.
Oh, it's a pleasure. So now let's get started. Some people view medical insurance as something like the American Express commercials. Don't leave home without it. What do you think?
Well, I think as we talked about in the last set of interviews, certainly medical insurance is critical to any family, adults or children, and evidenced by the fact that the majority of bankruptcies are caused by medical expenses that have been incurred without people that have a way to pay for it. So. Very important piece of financial security.
Okay, thank you for that. All right, well, let's talk a little bit about, it's actually a couple of years after healthcare reform now. And so, what's been happening as a result of healthcare? How has it affected access to care, for example?
Well, there's been some tremendous improvements in access, and 2 of the main ones are that nowadays 2.5 million extra young adults now have insurance through their parents' plans. So that was affected initially into law, and that works up until their age 26. They don't have to be in school or anything of that nature. So a lot of improvement there. Also in the area of California, we have 6,000 additional people insured under the pre-existing condition health plan that is guaranteed and insured through the government. Mm-hmm. So that's a huge increase of and a benefit to providing insurance to people that before that were unable to get insurance because they had a pre-existing condition. We are second only to Pennsylvania in that number.
Wow. Okay. So. Maybe you could walk us through a little bit about the changes that are happening, for example, changes that are happening this year and that are going to be also coming into effect next year, and how this whole picture of health care reform is affecting things and so forth.
Sure. Well, as you know, in the care area, you have preventive services now on all insurance plans are covered at 100% with no deductible and no co-insurance.
So that means you can actually go now and get your regular checkup.
Absolutely.
And it's covered by the insurance, and there's no deductible related to that. You may have to pay some lab fees, I guess.
No deductible, no copay, as long as it's falls within the guidelines relative to timing. There would be no cost at all, which to me that removes any reason to not go and get a checkup for yourself and any member of your family that happens to be included under there. Also, in the area of Medicare, we have implemented this year the 50% discount for brand name prescription drugs that are in the when the participant is in the donut hole of their coverage. So this is a huge benefit, and they estimate that it's approximately $1.5 billion on prescriptions that participants in Medicare will save, which is about $500-600 per person.
Wow,
so that's terrific, and that has been negotiated into the program. There's also an improvement in or a focus on patient safety that the law provides for, and that's the Partnerships for Patients program, which is designed to prevent medical mistakes in hospitals. And the estimate there is that they are going to save roughly 60,000 lives over the next 3 years. So that's an incredible improvement in that perspective. There's a couple of interesting things that happen in the area of cost savings. We all get rate increases, I know, and it used to be that the insurance companies would have to answer to no one for those increases. Now there's provisions in the law where if the rate increase is in excess of 10%, the insurance company has to justify that rate increase. And the results of this have been, I think, interesting in that both Blue Cross and Blue Shield, which are companies that operate in California, they have both reduced prior recommendations for rate increases by about half after they've been called to question in the press and through the Department of Insurance. And Aetna, which is another big carrier in California, has dropped a proposed 19% increase in premium. So this is working. I think still we wait to see what happens relative to the cost of providing the care. So certainly if the insurance company needs the rate increase in order to stay viable, then that's not going to happen. The other two pieces, one is the medical loss ratio, which relates to what percentage of premium must the insurance company spend on actual care as opposed to administrative and marketing expenses. And in California, that's been roughly 70% over the past, and that's now changed to 80% under the current law, 80% for small group plans, and 85% of premium for a large group, which is defined as greater than 50 employees. So that's going to be, and this is an area that there's lots of conversation about, is what's to be included in the medical loss ratio. What kinds of expenses can they include in there? And there's some back and forth on that. The fraud recovery effort has reaped $2.9 billion in healthcare fraud in 2011.
So this is actually people, if you will, patients or whatever, that were gaming the system or whatever.
Yeah, I think more than patients, it was probably providers that were gaming the system and sending in claims when there was no service provided. Yeah, so I think that's the big fraud thing, and Medicare is the big problem there. I mean, it's just fraught with it.
Oh dear.
So by doing that, it's really well, at least they're on the right track. You know, I mean, we are gonna lose some to that, but to have it all.
So what's going to be coming up? Well, one thing, of course, is we've got the Supreme Court that's actually going to be looking at this thing.
Yeah,
Isn't that right?
Absolutely. That's there's probably 4 or 5 things coming up next year that are going to have a tremendous impact on this. Certainly the Supreme Court decision relative to whether the individual mandate and the exchanges are going to be necessary, that's going to be huge. That comes up in March. And I think that may be a little bit of the reason why some of these states are holding back on setting up their exchanges, is that they want to wait and see whether it's really going to happen. The other thing, of course, is the presidential election. So if the Democrats prevail in one house in the presidency, then clearly the law will be implemented. If they don't, of course, as we see on every news broadcast on television, that the Republicans all want to repeal that, which may not be as easy as they make it sound, and I don't think it is. I think there's too many provisions in there that people are interested in having not to.
I think the irony is, as I understand it, is that most of these provisions were actually included in Republican healthcare reform packages before. Isn't that correct?
Well, I don't want to get into a political discussion.
Okay. Well, we'll not get into that.
Yeah, and I think our political environment is clearly strained at this point relative to trying to work together, which I'm disappointed in. I'd like to see those people who we've entrusted to keep the country going in the right direction really do something to keep it going in the right direction.
Yeah, but it's so expensive. Everything that our government does is so expensive. So
yeah.
So that's
now,
big issue.
Since you point that out, there's an interesting point that I just read about this morning, actually, and that is that the state of Connecticut, which is the insurance capital of the United States, Hartford. Every major insurance company is based in Hartford, Connecticut.
Okay.
The state is terminating its agreement with the private companies that manage their Medicaid program, which is their state, the state program for the underprivileged, and they're doing this because of poor results. Now it's interesting that the capital, which probably some huge percentage of the employees of the state work for insurance companies, are actually taking this step to take them out of the equation of providing their Medicaid services. And today, roughly 50% of the people that are eligible for Medicaid get that through a private insurer, through an HMO managed care type of a plan. So Oklahoma did this a few years ago, and they've had exceptional results with it, relative to premium increase being roughly 1.2% a year.
Wow.
For the last 5 years, and they report no appreciable decline in the quality of care or in the opinion of their patients relative to the care. So I think that's kind of interesting to see. We'll see what happens on that.
Okay, well,